Welcome, everyone. We have a lot of people signed up today, so I'm just waiting for people to come in and then we'll get started. So just hang in for a few minutes and we'll get started in about a minute or so as people are being allowed into the webinar. Okay. It's like the number of, no, some more attendees are coming in. Another 30 seconds or so. Okay, we'll go ahead and get started. All right, good morning, everybody. Welcome to our tax section webinar on the ins and outs of audits. I'm Michelle Weiss. I'm the tax section chair. And before we begin, we just have a couple of housekeeping announcements. First of all, you will receive your MCLE certificate shortly after the program. Your certificate will also be stored in BHBA Plus, our members-only community. Please take a moment to complete the survey that is included with your certificate. This program will be available in a couple of days in BHBA On Demand, BHBA's newest member benefit, presented by Lawyers Mutual Insurance Company. The tax section is sponsored by Hochman, Salkin, Toscher, and Perez. The Hochman, Salkin, Toscher, Perez PC advantage is experience, an eye for innovation, and a genuine dedication to clients, their families, and their businesses. In addition to their national practice in civil tax and criminal tax controversies, and related litigation in federal state courts. The firm is also active and successful in handling non-tax matters such as business and estate planning for high net worth individuals and closely held businesses together with white collar defense and commercial disputes. And now we'll go on to the program. And as it is, both of our speakers today are from our sponsoring firm. The first speaker I'd like to present is Cory Stigile, who's a partner at Hochman, Salkin, Toscher, Perez PC. He's a certified specialist in tax law for the State Board of California, and he is president of the LA chapter of Cal CPA. He frequently writes and lectures on topics involving taxation, and he has many speaking engagements and so on. He was awarded the distinction of Super Lawyer Rising Star in 2010 through 2016. As recognized and published in Los Angeles Magazine. He's also on the planning committee of the annual UCLA Tax Controversy Institute and a member of the Western States Bar Association. Our other speaker today is Philipp Behrendt, who's an associate at Hochman. He's licensed in California as well as Germany and assists in advising clients in civil and criminal tax controversies, as well as international money laundering and investigations stemming from tax avoidance structures. He also focuses on the technical aspects involved in advising voluntary disclosures in connection with DeFis, NFTs, and other crypto assets. Before joining the firm, Mr. Behrendt worked more than 5 years for a leading German tax firm. He's worked with client tax teams throughout Europe, the US, as well as in the Arab region. So with that, Philipp and Cory, I'd like to pass it off to you. And what they have told me is what they would like everyone to do if you have questions is please put them in the Q&A and they will handle them at the end of the program as time allows. And so with that, enjoy the program. Thank you.
Thank you, Michelle. So as I walked through the slides today, I was reminded of a quote from cartoonist Jeff McNally, who says that Oppo is always reminding him of his tax audits. It is in a language he didn't understand, and it always ended in a tragedy. So we are here today to familiarize you with the language and to provide some tools to prevent the tragedy from happening. So let's see what we have here today on the agenda. Of course, we start with one of the reasons why we do it today, and that is the Inflation Reduction Act that provides more billions of dollars in additional funding for the IRS. and that will also increase the audit rates. We then go to the return selection process, the when and how returns are selected for audit, and also to practical advice for representatives. Then turn to the audit process itself, and I hope we have enough time to cover also the impact of the BBA on partnership examinations, and we'll wrap up with some takeaways for the presentation. So we will keep the Inflation Reduction Act considerations short, I promise. Who is interested in it, in its impact on tax audits and other enforcement matters, we had recently, a few months ago, well, very nice discussion, me, Michelle Weiss, and Lavon Dawson. So it's available on YouTube, and you can rewatch that. So just some cornerstones here. The Inflation Reduction Act imposed several positions. Most relevant for the audit situation is the funding. Recently, and we saw it last week especially, there are efforts to cut back on that additional funding right now. That would be a shame, because taking the funding away would make things harder, not easier. And to improve the situation, we need more investment in quality and not less. The 80 billion in additional funding for the IRS, most goes to enforcement, as we will see here. But what is it used for? It's 25 billion for operational support, such as rent, printing, postage, and security. 4.75 billion for IT and callback systems. 3.7 billion for filing, taxpayer services, and the biggest chunk goes to the enforcement section. And that impact becomes apparent, the impact on audits. When we take a look at the relationship between audit rates and employees, because most of the budget will be used for, or a lot of the budget will be used for new employees, bringing back the number to 87,000 within the next 10 years, that is the goal. And we see here that the employee numbers dropped over the past years. And with the direct hiring authority the IRS received last year, we will hopefully see some new hirings very soon.
Yeah, Philip, let me make a couple points before we move
Sure.
on this one, and you already alluded to it, but a lot of our attendees probably saw the vote for the Speaker of the House, or the many votes, but ultimately Kevin McCarthy became Speaker. But also there's been some committee appointments this week, Ways and Means being the most relevant, in being Jason Smith, and who is associated with the Freedom Caucus. So, and then McCarthy, after getting the gavel, indicated that the IRS and funding was going to be one of the initial focus areas, and there was a bill that cut 90% of or proposes to cut 90% of the funding. So we'll see what happens with that. So as we're looking at the impact, the favorable impact, the 80 billion over the 10 years, the 87,000 aren't all revenue agents, as you said. And stay tuned. There just again today there was an introduction of a bill to basically eliminate the IRS, and instead to replace the income tax with a consumption tax. So you hear the saying, death and taxes, right? The two certainties. And so what's going to happen to the tax? Of course, the president still has a veto, but I think the takeaway here is stay tuned. And this is relevant. This is focused on examinations. Revenue agents know what's going on. They see when they look around, they have a bigger workload, and just knowing what's going on in the macro environment gives you things to talk about or understand that the revenue agent's dealing with, and ultimately it's a people person type business. So anyways, it's important stuff. Thanks.
Definitely, yeah. And employee numbers have a direct relationship to audit rates. So when we look at this chart here, we are finding the lowest numbers in 2018, 2019. If we look at the audit charts, at the audit rates, we will see the direct relationship was dropping down to 2019 to under 0.4%. And for the year 2020, the increase needs in other section. So the increase needs in other sections and the budget cuts left the IRS with round about 1,400 staff for audit rates right now. And that has a direct impact from the 165 million income tax returns filed every year. Just a small percentage has the chance of being audited. So last year, the audit returned in total numbers were 625,000 roundabout. So that's a percentage of 0.38%. That shows us that these numbers needs to get higher. Notably, however, low income categories, so the easy low hanging fruits, they have in relationship to that number, a relatively high number of audit rates, 1.75%. So more than 3 times of the overall audit rate. And that group of taxpayers have historically been targeted, not because they are in any way suspected to being the underreporting category, but just because the IRS increasingly relies upon correspondent audits and yet doesn't have the resources to assist taxpayer or to audit high complex tax returns from wealthy people. And the wealthy individuals regularly require more time and more sophisticated IRS personnel to be audited. So additional funding needs to close that gap, and the focus is clearly on that target group from over $400,000 in earnings per year.
Right,
so households and businesses.
And the IRA did have some language about not impacting those below 400,000. But just a takeaway on some of those statistics we just went through, it could be misleading. Statistics can be used for whatever you want them to say. But one of the reasons why you see certain higher rates in low income areas and targeting the poor, and same with the middle class, there's requirements to oversee the administration of what's significantly a welfare program, and there's checks and balances on that. So there's requirement to do it, and having represent some high volume preparers for low income type communities, the way they do it is they'll do like a sample of 50, expand it to 100, 200, and now you've bumped up the percentages a lot just because you're looking at the earned income credit, that kind of thing. So don't get too pulled into the statistics. Assume you're going to be audited, as we'll see later on.
Yeah, definitely. So as people may expect higher numbers of the 400,000 plus earners, they might feel that also people below that will be more audited. And that perception might be clouded by a few steps that have already been taken. One is the Bipartisan Budget Act that introduced a new audit regimes for partnerships that will increase the number of partnerships audits. And another one is that not everything that feels like an audit is an audit. So if we turn to return selection for audits, let's start with what is actually not an audit. And that is basically every limited contact and communication with taxpayers, like correction of mathematical errors, voluntary issue resolution programs, reconsideration and adjustments due to items and transactions in other tax periods. So examinations that do not go to the books and records of the taxpayer itself. And 2 programs stand out here. That's the computer-generated information return matching programs. The automated underreporting program that identifies mismatches to information returns like forms W-2s, forms 1099s, and others. and also the automated substitute for return program that identifies returns that were supposed to be filed but are not. And what happens then is it files a substitute return based on the information from other sources. If we look at the numbers, the IRS closed last year around about 2.3 million cases in the IUR program and 400,000 cases in the automated substitute for return program. Together, it resulted in around about 14 billion in additional assessment. If we look at the actually audit rates, the audit close are well under 800,000 last year. And so it is just a fraction of it, but the audit resulting in a complete amount of 26.8 billion in additional assessment. So even though they are lower in numbers, they are usually bringing a higher return.
Yeah, and real quick on that one, Philip, a lot of us are probably aware of this because we've seen it, but those matching tools that the IRS had of informational reporting to what was reported on returns or just returns weren't filed, as they've always done, were used to issue notices. Hey, you left off this item, or it doesn't reconcile with our information. The problem is that during COVID, the practitioner responses to those letters weren't addressed. So they just kept moving to the next notice and the next notice. So today, and we've worked through a lot of it, but there's just a lot of inventory out there for CPAs and attorneys to work through of these notices that weren't responded to and perhaps did go to a notice of deficiency. So you had to go to court to resolve them. Fortunately, the service knows this, and to give IRS credit, the appeals division, Andy Kiso, issued a memo basically acknowledging, look, we know this inventory is out there, that we weren't able to respond to the things, and appeal should treat it like it was, which was a interaction where the service wasn't able to answer it. So it's not a case where you're going into a case that shouldn't be there. They're acknowledging and conceding those cases where appropriate. And
the differentiation between audit and non-audit has a direct impact, because 7605, the section in the IRCA, protects taxpayers from unnecessary examination or investigation. What it basically does, it allows second examination of books and records for particular tax years in very limited circumstances. So the differentiation between what is an audit and what is not an audit has a direct impact how often the IRS can go back to you and ask questions about the same tax years. So since the service is excluding certain limited taxpayers' contacts from examination classification, the service creates a leeway within the 7605 confinement. On the other hand, but for more practical reasons, the IRS confines itself to not audit usually not audit returns in their final year before the statute of limitation expires. So in general, 3 years, unless, of course, there's an exception. 6501 provides the exception for substantial understatement of income, or also consent is one of these exceptions, and we will turn to that later. So while this is enough for now when we talk about the when, let's look at the how, and that's more interesting. The how basically strongly depends on what division we are talking about, what division is responsible for auditing a taxpayer. And each division has its own strategic compliance priorities. For today, we focus on SBSE, so the small business and self-employed division responsible for individuals and small businesses, and LBNI is a large corporation partnerships. They are responsible for businesses with more than 10 million in reported assets. So according to their priorities, do not match. In fact, they are very distinct from each other. And SBSE priorities, as you can see here, they are more under-reporting and underpayment of tax gaps, non-filing tax gaps. So the classical things And based on these priorities, they develop examination plans. The exact plan is kept secret, but these plans allocate resources and set out other priorities. LB&I is, at least recently, more transparent about it. They are shifting their focus over the last years from historically more geographically industry and taxpayer asset focus, and reworking themselves now to a risk and issue-based approach. So in addition to the four geographical areas they're divided to, they have now 5 issue-based practices. That is pass-through entities, enterprise activity, cross-border activities, withholding and international individual compliance, and treaty and transfer pricing operations. And they're mostly relying on compliance campaigns. These compliance campaigns build the infrastructure. For example, taxpayer receive soft letter on certain issues and giving the opportunity to avoid audit by amending the return. And these campaigns right now are, for example, virtual currency, S-Corp, built-in gains tax, micro-captive insurance campaigns. They can be looked up at the IRS webpage for LB&I active campaigns. But since 2017, we have around about 60 of these compliance campaigns established. And these established a switch to issue-based approaches. As the strategy is different, so are the selection tools. For SBSE, information returns are mostly importantly selected through information returns and return disclosures. And so it will be important for taxpayers SBSE is responsible for, that they ensure consistency between income tax return and third-party information return while they file their tax returns. That might prevent audits later on. The second selection tool is the DIF score. It is a score mechanism assigning a 3-digit score to each tax return. Happens through a series of algorithms, and that score is usually not disclosed. Sometimes you can find it on cover sheets or some transcripts, but in general, the higher the score, the more likely the return is being picked. And once the return is ready for being picked, it also determines whether or not the issue in question is significant. And it will only be finally picked if the item is significant. So here are the factors that are considered for the significance determination, and going through a few of them. The size of item, of course, if a questionable expense is 3,000 and the total expenses are 10,000, that might be significant. However, if you have total expenses of 300,000, the same expense is no longer significant. And you have also inherent character of the item. So also the amount of an item may be insignificant. The nature of the item may be significant. For example, if you have an airplane expense claimed by a plumber, that might be something picked up. And you see the other factors as well. So a permanent adjustment is, of course, more material than a non-permanent one. So long as the deferral period is, the more material is the item, and so on and so forth. So you get the factors.
And one point here, Philip, is there's this saying that there's no such thing as a random audit. And early on, and we'll get into more practical tips, but you're going to want to look at that return and speak with the client and understand what's on this return. And you know what the service is looking at if you're following up on compliance campaigns and looking at where the focus is. And you could get a good feel for where the audit might go by just thinking about these factors for why it might have been selected.
LB&I, on the other hand, has a more risk assessment approach and the risk assessment process, in fact. So there review taxpayers' forms and related data, and identify specific issues and observing trends. So the workload service risk assessor, this person determines whether the case will be included in the inventory and ready to be assigned to a field agent or not. And what this person is looking for is basically reviewing all K1 analyses to gain an understanding of the taxpayer's enterprise. And doing this risk assessment, they're identifying so-called large, unusual, and questionable items, LUQs. And these LUQs are considered then by the field agents for all entities in the enterprise that are determined to pose a risk of non-compliance. So once a taxpayer is selected for audit, the next step is to select the audit method. And there are basically three types, mostly in favor of correspondence audit. In place of face-to-face audits, IRS has increasingly, especially during the COVID crisis, relied on highly automated processes to send letters through the mail, the correspondence audit, and asking for more documentation on a specific item. So for 2021, it were 78%. And for 2022, it looks like it's even a higher number that relies on correspondence audits. And even last year for 2022, it seems that half of millionaire audits were even done through correspondent examinations. So the remaining percentage is mostly field examinations and a little percentage of audit, of office audits. So let's go a little bit more into the details. What's a correspondence examination? It is conducted by mail. So usually it involves only a few issues resolved by document production, often claims for credits, whether a worker has properly reported self-employment income, discrepancy between return and information returns, and so on. The challenge here is that you never work with the same IRS employee throughout the exam. So therefore, having a clear statements in writing and establishing an administration file for the case is very significant here, especially when it comes to appeals of tax court cases later on. The field examination are conducted by revenue agents operating out of the local service office. It's a more detailed examination of books and records and can involve interviews or discussions with the taxpayer and or his representative. So usually assigned agents identify large, unusual, questionable items, as discussed before, prior to the first contact. And a disclosure, explanation, and appropriate documentation attached to the return in the first place may prevent the field exam because the IRS employee, after surveying the file, may be satisfied with these additional information and just drops the examination. So explaining these unusual items on the return might help to prevent an audit. And especially if taking an uncertain position or a position that differs from the item reflected on a pass-through information return, that might be important. So field audits are time-consuming and can take up to 18 months. But if you don't run a business, it's unlikely that you have a field audit. So last is the office audit that's conducted at the local service center and conducted by tax compliance officers and often involve interview of taxpayer or his or her representative. So you will be informed what type of audit you face. And the first step, once you receive the letter, are basically always the same. So in a combined effort between the advisor and the taxpayer, just identify the focus of the revenue agent by what we have discussed before, by the focus and priorities, and limit the scope and duration of the audit as much as possible for the taxpayer. Also important, manage the information flow between client and IRS. The client should not send something to the IRS before you have reviewed it, or in the best case, you send it over to the IRS yourself. And generate a record of all correspondence. Reduce the telephone conversations, they are not reported. They're not in the record. and consider what type of competences you need for these anticipated questions and choose to supplement the team if necessary. If tax issues may be troublesome, and we come to that later, and we will consider to get a tax attorney on to prepare for the audit as well and prepare for potential appeals process. A tax attorney opens the toolbox a little bit more when it comes to Covell accountants. These are accountants the attorney-client privilege extends to. That might be very helpful if you have to reevaluate certain tax items. And very important, if fraud is identified as an issue, consider a competent criminal tax attorney. Criminal procedures follow their own rules, and they are not to underestimate it. And while most of these questions are for the practitioner, let's turn to some practice advice and practicalities. And the most advice is prepare, prepare, and prepare more. You have internal revenue manuals available, and they give you a pretty good idea, pretty good guidance, what issues you can have to anticipate, and familiarize yourself with the IRM applicable to your case, and you have a list here, can make a significant impact on your case. And whether part of the preparation is also the first client contact. So what you want to see in the first contact with your client is tax returns for the examined years, the correspondence between a taxpayer and service, and issues related to documentations. But that information sharing is not a one-way street. In the first client contact, you want to explain to your client what the audit process is about and how it goes on. And Cory, as you represent probably hundreds of clients in different audit situations, I will turn it over to you for the best practices.
Okay, thank you. And before we move on, there was a question which I accidentally marked as answered, and I can't unmark it, that the answer was code section 7605 regarding duplicate examinations. But then you get into what Philipp was talking about. Well, technically wasn't an examination if it was just correspondence and did look at the books and records. But that was the answer to that. And there's a slide coming up where we'll have a whole list of different statutes that show, list different rights of the taxpayer. And that's helpful because as you're going through an IRS examination, it's like Philipp was just saying, you're corresponding with the IRS, you're also communicating with the client. You're the interface with the federal agent. So knowing the rights, when to push back, that's really the art of IRS exams or FTB exams is, just understanding the taxpayer's rights. And you are an advocate. Yes, in an examination, a significant part of that is obtaining documents and giving those documents to the IRS. But there are some, plenty of things to think about when you're just doing that. You're not just obtaining and sending documents, you're reviewing it for responsiveness. You're reviewing it for privilege. You're thinking about taxpayer rights. And so it's much more than that. But in any event, communicate, and these are best practices right in Circular 230, but communication is going to be key. The better you can understand the issues from the client's perspective, the better you can communicate that to the IRS. And while you're just giving documents, obtaining documents, giving documents, you need to think ahead like an attorney and think about what's the issue, what are the facts. You need to develop, this is the development of the facts. The clients know the facts, or at least they have the information if they knew what the issue was, but they're the ones that control the facts. So you have the direct communication with the client that knows all the facts. The IRS doesn't. They're auditing the return. So that's why it feels like the one-way communication flow, and they have tools to get the facts. But by being there and being the one to distill and provide and just keep that communication going, you can really control the audit, get the information the IRS needs and can otherwise get, but do it in an organized way so that your client doesn't make any mistakes. And that's where you can help them. And then of course they need to understand consequences of penalties and, you know, what the IRS can do, because if for them, they don't know. They don't know if they gave the information to their CPA and signed a return. Did they review every line of it? Most don't. So you really act as that interface and could help the client understand, but you know, but also keep it fair. You need to act with integrity with the IRS, but in doing so, in adding credibility, you could have that normalize the communication so that a mistake doesn't get made. Okay, next slide. Okay, now these are some important slides just because they just highlight, you know, things to think about. It may well be that it's a narrow issue scope exam. They request information, you give it, and it's done. That's probably the exception. All right, and then there's a cadence to an exam. Do you want to move quickly? Do you want to? And you do need to respond in a timely way to the revenue agent, but there's a cadence there. You get a request, you give the information. They do follow-up requests, you give the information. If a deadline's coming up, you don't let it pass. If anything, if you don't have the documents yet, contact the revenue agent, say, hey, look, I know the 30 days expired. We need some additional time. This is why, and they'll give the time. And if they don't give the time, you've documented it, and perhaps you follow up the phone call with a letter. Hey, thank you for giving us the additional 30 days to respond. Because if ultimately that turns into a summons issue, now you've been timely when you haven't been. You've asked for the time that you needed, and you've documented it, so that later in a summons proceedings, you could stand up there with credibility and explain to the judge what happened. Okay, but you do need to respond timely. Now the third bullet point here about responding in a correspondence exam is very helpful to give the letter that you're responding to and include it in there. These days, the service has really opened up the ability to communicate in different ways than mail. Certified mail is, the best if it's a deadline, because you could document that it was mailed and it was mailed timely if there's important rights there. But now you could fax. Oftentimes there'll be a fax number on it. With the revenue agent, they've opened up on the ability to receive emails and even send emails with passwords on it, although typically they'll take it, but they perhaps won't send you as much with that email. And if you're dealing with LB&I, they even have portals now, and I very much recommend that you get the older e-services, but also there's other tools now on irs.gov, and you could get transcripts a lot easier in ways other than e-services. And you could upload documents either to appeals officers, LB&I revenue agents, and so when you're sending very voluminous documents, being able to upload those to a portal as opposed to sending multiple emails that don't have too much space in each of the emails, it becomes a lot easier to send hundreds of pages of documents. You really got to know the client though early on in the examination before you're giving the information, and you're going to get that initial document request. And that document request is going to list a lot of things on it that looks kind of like it's standard, but then there's a couple of requests in that document request that are pretty specific. And you probably identified it yourself when you looked at those returns when either before or when you first met with the client, and that's what they're looking for. So earlier when Philipp was talking about the information return matching, you'll see right there that they're asking about the crypto sales because the amount reported on the, let's say on the return was an even number of 20 million, and they got from the informational reporting probably a bigger number that perhaps didn't have cost, but also it's not an even number. So that may well be why it got selected for exam, but then they issue spot, and they look, but you could see when they looked at the return what they're looking for. But know your client early on, and before you start giving documents, you want to know if there's anything going on there. So you ask the client, what are you concerned about? Just ask them straight up, is there anything on this return that you're concerned about? See what they say, look at that issue, get the documents for that issue. But you want to get ahead of it because you're the one with the information. Your client has the information, the IRS doesn't. and that's why they need to ask for it. Okay, and then when you are communicating with the IRS, before you provide the document, just make sure it's not, just think about privilege. Is this a communication with an attorney for some legal purpose? And consider that before you produce the documents. Okay. If you're a client, it may well be it's a shoebox small business client that's under examination. Okay, fine. They probably did their best, gave the information to the preparer, and the positions are on the return, and that return is now getting audited. But if you have a company that went through or regularly goes through a financial statement audit or even a review, you can make a point of that, because that information that you're giving to the service isn't something that someone knows how to use one or two modules on QuickBooks and that's it for the business. Those financials actually got reviewed by an independent person. So you could emphasize that part. It's not just giving the documents, it's presenting it to the IRS. And if there's something there that you think adds credibility to the document and could make it more persuasive, think about that. And so make it more than just giving the documents. Be very clear in how you provide the documents. Make it easy for them. Here we're thinking about staples and, you know, kind of the old way. If you're sending it electronically or via fax, make sure there's an index on there, and maybe put 1 of 3, 2 of 3, 3 of 3, and make it real easy for them. And having, in addition to the index, have headers there with the documents. And maybe in the emails you could have different attachments with different exhibit numbers. But just think about how could you make it easy, because you don't want their frustration level going up 1, 2, 3 notches before they even get to the substantive responses. And then just another thing on this one is transcripts. Early on in the examination, and hopefully it's already there in the return preparer's file, because they obtained it doesn't specifically say wage and income transcript, but hopefully they got a wage and income transcript and made sure they didn't miss something, because that could be the reason you're under examination. But having the return, having the wage and income transcript, looking at those two, getting to know your client, you're going to have a leg up over where the revenue agent's at. And then it's just they ask what they ask, and you give accurate responses as they ask it, but you're ahead of the game. And sometimes though, you'll be dealing with a issue that you acknowledge shouldn't have been the reported position, and you'll get this where the prior representative sent some amended return to the agent, basically saying, yeah, here's an amended return to just kind of erase all it. So all that really is a bunch of admissions on things that are, now it's a helpful tool. The same tool could have been an Excel schedule that said these are the things that we want to acknowledge should be changed or something like that. But if you're already under audit, you're not going to be probably, I mean, there's situations, but you're probably not filing that amended return. If you are, you're doing it to the service center for filing and sending a copy to the revenue agent. But just appreciating that you're already under exam, and it's a little late to be filing the return is helpful. Now, on the other hand, you have other situations where there's a late filing, and you want to get that documented to stop the 5% a month late filing penalty. So again, you want to document you're filing that return with the service center, so it's not just ticking up. And you hear, well, we gave the return to the revenue agent, but they never got it, never got processed, and then so years later in an audit reconsideration, because they didn't really know what they were doing, that return never got filed, and because of that, there's extra penalties at play. So just think about what you're doing when you're already under audit as far as filing returns. Okay, and then we could skip this one, just the lead slide talking about a little bit more about the audit process. This here's the slide I referred to earlier in response to that question about, what are those taxpayer rights? What do you do with if they're going to do a audit after they already audited that return? At one point, does it become abusive? And here's a bunch of rights that I think we pulled from a ABA presentation that was going over taxpayer rights. So you could peruse this. An important list of rights, and it ultimately got codified, is the Taxpayer Bill of Rights. And that's in section 7803A3. And it's interesting as you're working through an examination, you have a right to quality service. Okay, that's good to know. You have a right to challenge the position of the IRS and to be heard by the IRS. So there's rights there to, so when you're responding and it seems like you're giving answers, but all you're getting are questions and not responses to the information that you gave that should have pinned down an issue. It's you do have certain rights. Okay. Here's a nice, I like this one because it highlights some of the stuff that they're focusing on, and I think we'll answer the statute of limitations question from Armando when we go through the slide. So these days, it was always in the Internal Revenue Manual, but that they're going to request a tour if we're dealing with a business, and they're going to request an interview. But I'll tell you, they're doing it, and they're doing it earlier. Revenue agents want to speak with the client. A couple things and they want to walk around the business. If they're building widgets, they want to walk around and see what's going on there. And sometimes it doesn't make sense if it's a business that's kind of a remote business and there isn't an office. Some of this is, post-COVID, somewhat irrelevant, and you could explain that to them, and they'll mark up that, well, there's no business to actually physically tour. But anyways, expect that early, and it may be strategically or just you're still getting a lay of the land and you don't want your client being interviewed yet. Perhaps give the documents first and say, hey, let us give you the documents so you could understand the issues better, and then we could deal with the interview later and then see if they follow up. But they will, because they've got a box there to check to interview the client, and they do want to tour the business. So just it's not that they're trying to be all invasive. It's that it's on their checklist and they want to do it. And you know what? They'll show up and they'll be the disgruntled employee, and they'll say all the bad things that are going on or something. So you need to think about the office for when they're going to come visit, and just appreciate and be situationally aware that there's going to be a revenue agent sitting there in the office. And but you want to be there, let them see what they want to see, be helpful. And now on information document requests, and there's a slide later on overburdensome and overbroad, that kind of thing. So we'll get into that later. But there's a question of, how do you respond to this information document request? And, do you give narratives? Do you, explain things? What do you do? And in different situations are going to call for different, answers to that. Perhaps a conservative approach, but it would depend. I mean, you do want to be helpful, help them understand the issues. But oftentimes early on, I give them the documents that they want and are entitled to, but I'm not sure I want to characterize it yet. I mean, it was like the earlier slide where we're talking about we're applying facts to legal authorities and explaining why the outcome of their analysis should be that they get the write-off, whatever it is. I want to see what comes out over the next couple of months, what comes out in the interview before I characterize something. And you have to be careful if you're putting a narrative and your client tells you a bunch of stuff, and if you just regurgitate that into a response to the IRS, how have you vetted that? Because those representations need to be accurate under Circular 230 as well. So oftentimes early on, perhaps give the documents and then perhaps follow up with explanations after you make sure your characterization is going to be accurate. Okay, so here, extension of statute of limitations. This is this is one of the common questions that's going to come up. Like Philipp said, maybe they're getting the audit underway in the second year of the 3-year statute of limitations from the due date or the filing date, whichever's later. And how much time are they asking for? Is it reasonable? And it's a judgment call. I mean, frankly, oftentimes it's going to make sense to cooperate. We know they're busy. We know they're understaffed, to give them the extra time and let them do their audit. Other times you'll hear you hear it like 2 or 3 times. Oh, I got to work on these other exams. I'll get back to yours. Can you just extend the statute? At some point, your client's had enough. And you know what? If you don't extend the statute, they'll issue a notice of deficiency, and you could file a petition and go to court. and probably still resolve it with appeals, and they need to just take their position on their issues. A danger in that is if you don't extend the statute of limitations, and they're forced to, you force their hand, and they're going to give you your examination report, they're going to disallow more than perhaps they would have if you could just shown it. And guess what? They don't give you all the benefit of the doubt as far as, you know, whether you could take certain deductions or whether certain things are income. So, you know, so one of the questions was, are you required to extend the statute? And it says revenue officer, but with revenue agents, and no, you're not required. And sometimes you're not going to want to. But, you know, oftentimes you'll, you know, in the spirit of cooperation, and you know what, if you want to do it, go to the next level administratively and not escalate the costs with court, you'll need to have, and it depends on the type of issue, but you're going to want it at least a year, perhaps 2 years on the statute to work through the administrative appeal process. So you're going to want to extend the statute anyways. Others, and for sound reasons, won't extend the statute. And you know what? They'll go to court, and there'll be perhaps a higher upfront cost, but you know what? Those issues might be heard earlier and not based on the revenue agent's schedule. And it cuts off that information gathering from the services standpoint. And you do have the right of the statute of limitations. They only have those 3 years unless something else extends it to a longer period. So you could decline them in response to the question. You don't need to extend the statute, but know that it may force them to issue a notice of deficiency. Okay, and we've kind of already hit some of the points in this slide here on the IDR process, but Circular 230 gives you some good guidance just to think through ethical kind of guideposts to follow. You do need to give that information. You need to promptly, not just give the information, but promptly submit the records. But what if they request all the blue folders, but there's a lot of blue folders, but there's green folders? Do you give the green folders? So there's a responsiveness question to think about there. Is this really asked for? And you can imagine sometimes you're sitting there reading the question, what are they really asking for here? And you know, sometimes you might want to get literal, but generally you have a duty to respond to the document request promptly, and you do it. But, you know, is it really responsive? Is it privileged? You know, so you work it, and as an attorney, think about it, and perhaps it's a negative fact, but you want to explain something along with it as you provide it. And maybe you don't, and you give it together with a lot of other documents, but they do have a right to the information. And also, even if you don't have it, but you know the person who's in the office next door does have the document, if you're going to say you don't have it, you do need to indicate who does have it, and you can't be false or misleading. So when you're giving the information, if you're trying to get cute, don't. You know, perhaps there's a privilege to assert or something like that, but be stand up, because if ultimately you were sitting on the document, that's a problem under Circular 230. And this, you do want to be an advocate, and a zealous advocate at that, for your client, but not at the point of your own license. So act with integrity. You know, follow everything you learned in, you know, kindergartens, what you need to know, and you should be fine. Okay, one thing when you're giving documents, and you'll see this a lot with, you know, different practitioners, but think about, is this thing that you're giving the IRS a historic document that they requested and they're getting, or is it something that's being created by either you or the client? Because you don't want to get into altering documents. And sure, you could present a schedule. Maybe they didn't keep for passive loss issues, a log of how many hours they spent on the business, and you could do a helpful recreation of it, but it just needs to be labeled as such, and don't allow them to determine that it was an original document prepared contemporaneously if it wasn't. So just think about that when you're reviewing documents. Similarly, if they request QuickBooks, and they will, and they'll request it electronically for that matter, you want to know in advance, you know, who was entering information into QuickBooks. And you know what, if they fix things up later, there's going to be metadata in there to show that that was an altered electronic document. So just as you're managing documents to give to a federal agent, make sure that things aren't altered, because they'll be able to back into all that. And in one of the things, there'll be a slide a little later on the badges of fraud, but what you don't want to do is make it any worse. And you could do that by presenting something as something other than it is. Quick point on LB&I audits, those IDRs, they should, and it's some of these issues have bled over into small business self-employed, but on LB&I bigger audits, they're going to be a lot more issue focused, and they have a whole procedure to work through where you agree on the document request before they send the document request, then you get the document request that you already knew you were getting, and it's kind of more formal. But some of those checks to, keep them reasonable in what they're requesting, but they'll request it anyways. Next slide. Okay, on this slide, and you could come back and peruse it later, but just know that these are the factors for if you're not going to give them something, they could summons it and obtain it, and the standard's pretty broad. They're going to be able to get helpful information for their audit, and they'll tell you before they reach out, but they'll reach out to who do you think is the first person they're going to contact? The preparer. But they'll reach out to third parties, and this describes in the processes. Next slide. Okay, so here we come to the answer one of the questions. What do you do with these IDRs in these different situations? What if you don't have the information? The client doesn't have it, they lost the receipts. Perhaps you could reconstruct it. There's a case out there, the Cohan case, and maybe you don't have all the documents, but you've got a third of them, and you knew the building went up, so they had to have expended the cost to build the building, but you don't have the receipts. How could you indirectly prove that? Cohan rule, maybe you get some affidavits from clients. At this point, you're thinking, how do I present my case? And as attorneys, we think of evidence and how to develop cases in different ways. And audits, maybe it's more of, give us the documents of the clients, but you could think like an attorney and develop your case, develop evidence, present it in the best light. And sometimes you have the facts, but they're perhaps not the most favorable. But you'll want to respond ethically, and obviously not to destroy anything, but contrast. Look for distinguishing cases where different facts perhaps are emphasized or de-emphasized. And you know what? If you have a difficult examiner, and this ties into the overbroad, burdensome question, work with them. But you know what? You could talk to their supervisor. It's not even an issue. I'd like to speak with your supervisor. They probably have the supervisor's name in their voicemail. And if the system isn't working how it should, and you'd be surprised the kind of things that occasionally will happen. But revenue agents are well trained; they're going to work with you. But sometimes you get a difficult situation, you can go to the taxpayer advocate. If the system's not working how it should, go to the taxpayer advocate. Fill out a form 911, explain why it's not working. Maybe they didn't respond in the 30 days, whatever it is, and you can get some help here. One thing you want to do in an exam is not make it worse. And you need to identify early on and like I said, ask your client, is there something here I should know? And you don't want to stumble into finding out that they, revised retroactively their books and records and you give the incorrect modified version of QuickBooks or something in the exam. You want to learn that earlier. And but these are the badges. If they can identify these and put them together and get into the taxpayer's mind and show that they intentionally did something, now you're looking at potential civil fraud penalty or even a referral to criminal investigation. Statute of limitations, I already discussed this. Just be aware there's different types, and it gives them more time beyond the 3 years. And you can restrict the 872 by issue. Know that early on that they're going to do a bank deposit analysis, so you should do it too. And you'd work with the CPA before that. Are we running out of time here?
Yeah, I just want to mention we're coming right up on 1:30, so I don't know if you want to wrap it up or ask, I don't know if you've answered questions or how you want to.
Yeah, okay. If we could just go to slide 33. I do want to, closing up the exam. Sometimes you're going to disagree, and that's fine. And you can go to protest and go to appeals. There's going to be issues, but the buzzword there is if you can agree, it's called an agreed basis outcome. Call it whatever you want, but it's a signal and it's not settlement. But are we going to resolve this or not? But you know what? Even if you agree to disagree and the client signs a form 870, which consents to assess the liability, you can always pay and sue for a refund later or do a refund claim later. So it doesn't necessarily close out your issues for court later. But I think that highlights the things that I wanted to talk about, and I think we could take any additional questions. I think I answered the questions about the IDR and the statute of limitations.
All right, well, thanks. I guess we can unshare the screen, whoever's screen sharing. Okay, all right. I just want to thank everybody for joining us today. This was really great and chock full of material, and I'm sure we could have listened to you for at least another hour, but it's really helpful, and thank you so much for the webinar. I just want to mention, if you want to get more involved in the section, our next tax section meeting will be on the morning of January 19th on Zoom. And next month, we will have a program with Professor Phyllis Tate, who will give us who will provide a discussion on viewing tax law through a social justice lens. And this program should qualify for the implicit bias CLE credit. So thank you, everybody, for joining us. I want to wish you a great rest of your day and be well. Take care. Bye-bye.